Hey guys, what's going on? Coming at you with a Saturday morning video. Just wanted to basically talk about a stock I bought yesterday. I've been talking about it all week, but it kind of was rallying, after, Monday we had a hard sell off, then Tuesday, Wednesday, Thursday, we kind of had a mini rally. So I never like buying on green days. That's kind of what I don't do as a long-term investor. It's never going to be green forever, so I don't ever like really chasing something. So obviously, per my title, it's Meta, ticker's FB. So I did buy yesterday at 190.48, roughly about 5% of my position. That's a relatively small buy for me. If you haven't watched my previous videos, I'm a long-term investor. I've owned Facebook since 2019. I didn't buy it once in 2020 or 2021. When it got under that 215, 200 range, I guess in the winter, it kind of started interesting me again because it was around my cost base, and I thought of, basically we're back at 2017, 18 levels if you talk about like per share price. So it became intriguing to me again. I started just chipping at it. So my position was already really built out in 2019. So that's why you're seeing this percentage really low for what I normally, buy at a chip, just because it's such a big position already. It is a top 5 position of mine. My cost base now is 192.85. It's crazy to say in 2019, my cost base was like 198 or 200-ish. So it's just crazy to think that I've held this stock for over 2 years and it's below what I previously had it at 2 years ago, which is crazy. It's just such a good company for the long term. Like Zuckerberg's got his head on straight. He's got a great management team. He's got a great balance sheet. He's really looking into the future, and he's gonna, in my opinion, if anyone's gonna make it in the metaverse, it's gonna be Facebook. They have the users, they have the money, they have the employees, they have the management. It's just, if you believe in it, this is a very good opportunity. So if you do technical analysis, which I do a little bit, this is more of like a trading thing, but there is a very strong TA line if you look at like the 1 or 3 month or even 5 day, right around 190, 188. It tends to bounce. The 52-week lows hit like 169, 170, but unless we have extreme pain in the market, we have some crazy stuff with CPI data this coming week, I don't see it getting down there again personally. But so I do like that it's bouncing off like kind of that TA bottom. So I thought I'd just buy a little bit. I haven't bought a stock in over a week, so this was kind of the one I wanted to buy. So, so running like my just numbers of where I think Facebook's gonna be, assuming they don't grow like crazy, just average growth, average share buyback, nothing crazy, normal market. Basically 215 is the mark where I'd stop buying Facebook. In my opinion, I do think this stock is going to run to 350, 400 within the next 3 years. That's my opinion. So if you're buying sub 200, you're basically going to get a 2x on your position if you were to buy now. And if Metaverse pops off and they get sponsors and they're the industry leader and it succeeds, you could maybe 3 to 5x your money. Obviously if it does extremely well. They did say in their last earnings call that they are going to deploy a lot of their cash, and you're going to see the cash on the balance sheet deploy, as in go down, because they are really investing in the metaverse, and it costs a lot of money to get the programmers and just everything they need to do there. So that's something you have to be prepared about. So that shouldn't really scare you if you're following the stock or reading the balance sheets every earnings. The Dow yesterday was down 1.04%, S&P was down 1.63%, NASDAQ was down 2.46%, my portfolio was down 4.16%. So, if you look at Friday over Friday, I'm still up. I think I'm up roughly 2% if you were to overlap Friday over Friday. So that's, we're off the bottom, so that's a win. Something that really pulled the market back yesterday morning was the Elon tweet saying, he sees really bad economic things in the future coming. I take that with a grain of salt because I feel like his company, he sees the sales slowing down. It's, Shanghai was shut down because of the China lockdowns and stuff like that. So I feel like he's really getting too emotional within his own business because he's getting frustrated and he's seeing this. But if you look a lot of like Lululemon, for example, they had a great earnings recently, like last week. So the upper middle class and upper class aren't really seeing an impact on the inflation right now or anything like that. It's really the middle and lower class that is. So it really depends on where you're putting your eggs in your basket, basically. Job report also came out yesterday at 8:30 in the morning Eastern time. We added 390,000 jobs and they were expecting 328. It's funny, a lot of people, I'd say majority of people look at this as negative. In my eyes, I look at it more positive than negative, like 60% positive, 40% negative. So the reason I think it's positive is because if companies stop hiring, that's a really bad sign that growth is significantly slowing. And if we're going under expectations, yes, the Fed would cool off maybe a little bit, but I'd almost rather go a little bit over because the Fed has a little bit more of a runway to deal with the rate hikes and kind of see it going down. So I like that we beat it a little bit. It's just showing that companies are still hiring, which makes me feel good. Unemployment was 3.6%, which is very strong. That's like the lowest it's been in years. So anything sub like 4.5%, I feel really good about the labor market. If we see jobs go under expectations and we see this number go up, that means the Fed might be tightening too much. Therefore, we might be going into a recession and it's going to get really messy. And then people are going to, companies are going to lay more people off. We already see that, like big tech companies are laying off. Tesla said they're laying people off or freezing hiring. So we're seeing it at the companies that did very well during COVID are the ones that we're seeing, lay people off. But they were also hoarding workers, kind of, you could argue, like Amazon and, they were growing too quick. It wasn't sustainable. Nothing was sustainable. So it's kind of good. They're getting, they're going to keep their good workers and they're going to lay people off, and then it's going to kind of all work itself out, hopefully. Wage growth, this is good too. It was only up 5.2% versus expected 5.5. So this is good too. So that basically means we're not in a wage price spiral. There's a lot of fears in the beginning of the year that we were in one. So, April's was 5.5. The one that just came out for May was 5.2. So that's good. So that means there's no wage price spiral. That number is declining, which is what we want to see. So I look at it as maybe 70% good, 30% bad. So I don't really see why people as a long-term investor, this is exactly what you want to say. It's heading towards a softish landing. It might not be a soft landing, but this is kind of what you want to see. And I think the only argument you say is, the Fed's going to be more aggressive hiking, like maybe in September. That's fine. I'd rather see this way than the other way around and everything crashing and burning and falling faster than expected. Then what's the Fed going to do? They say they're going to rate hike half point the next two meetings. So that's even scarier then, because oh my God, they're going to hike more. So I think they're doing it the right way, and I like this jobs report. CPI comes out coming up Friday. So I'm really excited for that. I think the expectations are 8.2%. The prior month we came in at 8.3. So that kind of makes me a little nervous just because it's so close to what last month was. I really hope they come in with like an 8.1 or an 8.0. The market would really be relieved on that. I don't know what the core inflation is. I didn't write it down, but core needs to go down too. So if core goes down, overall CPI goes down, we're in really good shape. And I think that might really, some people are like, oh, well, it only went down 1 month, we need assurance. So that's really going to kick off a rally, in my opinion, like a summer rally, if all that goes to plans, but we'll see. So if it, that's why I'm being a little careful buying stocks right now, because if it does miss, I want to have a lot of cash. I've been stacking cash for the past 2 weeks, basically, like heavily, and I have obviously reserve. So if it goes to all-time 52-week lows, like I'm buying like crazy. So it's kind of my approach. So it's a win-win for me, in my opinion. So that's all I got. Till tomorrow. Make sure you guys subscribe if you like this video. And that's it. Peace.